Welcome to our weekly Forex forecast. And today we'll be looking at July 29th to August the 2nd, 2019. So we're already in August here. All right, before we get started, just a quick disclaimer here. This is for educational purposes only. Trading is a risky business, so please be careful with your money. Especially over the summer, this is a low liquidity month, especially August. A lot of people are away on vacation, so there isn't as much activity in the market. And what that means is that our moves, that the normal moves can be quite exaggerated because of the lack of liquidity. So as usual, we'll get started by taking a look at our calendar here. So in terms of our news here, so big thing that happened last week was our ECB monetary policy. So everybody, all the people, all participants in the market were expecting ECB to actually take some monetary policy action. And they didn't. So they actually postponed it till September. But the language that that came out of ECB was actually quite dovish. So now the market is expecting an interest rate cut in September here. But as a result of that, we saw euro go up substantially, or at least it went up quite a bit. About 100 pips or so right on the back of that news, and later it went the other way. So that goes to show that there's a market sentiment that gets created as we go into any important piece of news. So just keep that in mind. Fundamentals or the macros are very important for us to understand. So this week here, we have, first of all, on Monday, not a ton here, but in the Asian session, we do have another central bank here. So currently, the central banks are changing the monetary policy. So over last year, they were actually increasing rates. So we saw Fed raise rates, as well as Bank of Canada raise rates, Bank of England raise rates, but now they're going in the opposite direction. Now we are seeing central banks actually ease monetary policy. So as a result of that, markets are reacting to the monetary policy statements as well as to the sentiment prior to the monetary policy statement. So these things are very important right now. So we have Bank of Japan monetary policy statement coming up. Bank of Japan has, they haven't actually done anything yet, but so far they have been vocal about wanting to do something about it. So this will be important. So if we see that the Bank of Japan takes any monetary policy action, they provide more liquidity or any kind of monetary policy action, or they talk about it, it will be bad for Japanese yen. And we could see yen crosses actually go up as a result of that, because yen could weaken on dovish comments or negative comments from Bank of Japan. So if they're concerned about trade wars, if they're concerned about the state of economy or the forecast for the economy, all of that actually will be negative for Japanese yen, which means yen crosses would go up in that under those circumstances. So keep that in mind. Usually we see a reaction when the monetary policy statement comes up, and then another reaction during the press conference as they answer the questions. So that's what we have on the start of the week here. And going into our Tuesday here, we have consumer confidence numbers for the US. So this will be important. The data that has been coming out has been kind of mixed. We saw some poor numbers out of the US, and some of the numbers that have come out lately have been positive. So let's see what kind of number comes out here. If the number is below expectations, then we are likely to see the US dollar drop as a result of that. And then we have manufacturing PMI numbers here for China. Chinese numbers usually have an impact on Australian dollar and New Zealand dollar. I do not trade the Chinese yuan. However, I do trade Australian dollar, New Zealand dollar. So those two currencies will be impacted by Chinese data because if the Chinese economy slows down, it will have a direct impact on New Zealand and Australia because they are the biggest exporters because of the close proximity here to China. So keep an eye on Australian dollar, New Zealand dollar for a reaction based on these PMI numbers. And then, of course, we have consumer confidence number out of New Zealand, as well as we have the CPI, which is our inflation number out of Australia. So inflation number is one of the key data points that the central banks track. If the inflation number starts to drop, then central banks want that number to be around around the 2% mark. So if it drops below that, if it is going into a negative territory, that is bad, and central banks would likely want to act. So we could see a negative reaction in Australian dollar as a result of that. Now, we also have on Wednesday ADP non-farm numbers. So this week is very important for the US dollar. We have two key things that are coming up here. So one is so before we get into that, so we have ADP non-farm employment because this is the first week here. On Friday, we also have this non-farm payroll numbers, which usually have a big reaction. But prior to that, on Wednesday, we usually get an ADP non-farm employment numbers because ADP is one of the largest payroll processing companies. This is like a precursor to the non-farm payroll number. That's why this number is important. So if we get, if the number comes in below expectations, this will be negative for the US dollar. And we have GDP numbers for Canada here, and we're likely to see Canadian dollar impacted by the numbers for GDP here. Very, very important. We have FOMC. So this is the big FOMC meeting that everybody has been waiting for. A couple of weeks ago, we saw a whole lot of FOMC members come out and give their statements. Most of them were in favor of interest rate cuts. So the market has been expecting an interest rate cut. So I would look for a 1/4 point interest rate cut. Some people have been thinking that Fed will do a 0.5% interest rate cut. So here's the thing. If they do a 1/4 point interest rate cut and they're dovish about the economy, so they think we are likely to see, so actually let me backtrack a bit. So this is supposed to be an insurance cut. Fed does not think that economy is currently being negatively impacted, but they would like to do an insurance cut so that they can counteract any of the negative impacts of the trade wars and so forth on the economy. Now, some people have said, like Bullard said, that a 0.5 point cut will be good, but market doesn't see that. We saw that Powell doesn't think a 0.5% cut is required. So we are likely to see a cut that is more 1/4% cut. So if they do not do any cut, that will be negative for if they do not do any interest rate cut, that will be positive for the US dollar. If they do 1/4 point cut, that is in line with market expectations. So if they do a 1/4 point cut and they are dovish about the economy, that will be bad for the US dollar because that means that Fed is likely to do further cuts. However, if they do a 0.5% cut, that will be negative for the US dollar. So there are different scenarios that we have to keep in mind. If they do a 1/4 point cut, but they are not dovish about the economy, so they do not really say they're not concerned, so they do not express a lot of concern about the economy or the trade wars, then that would actually may not be negative for the US dollar. US dollar could actually go up based on the comments that are seen as more positive. So there are different scenarios that can play out. So just be careful. Plus, like I said, this is summer months, low liquidity time, which means any of the moves, they tend to be more exaggerated. So normally where we may see a 50 pip move, we could get a 100 pip move. So just watch out for that. So if you're trading during US dollar during this time, you want to be careful. All right, so moving on, we have more manufacturing PMI numbers out of China. Like I said, Australian dollar, New Zealand dollar are the ones we have to keep in mind here. And then we have the third central bank this week, Bank of England. So Bank of England not expected to do any or make any changes to the monetary policy at this point. They have been quite neutral. They have basically said that they're not concerned at this point. But if their language actually shifts to being more dovish, that means they're concerned about the economy, especially with the Brexit related stuff, that could be negative for a British pound. But if they say that they're not too concerned, that could actually be positive. So looks like I lost my chart here. Just give me a moment, please. There we go. Sorry, where did my... There we go. Okay. All right, so we have to pay attention to what is being said. All right, the next one here is our, on Friday, or on Thursday here, we do have ISM manufacturing PMI numbers, and then we have retail sales here for Australia. So both of these, so Australian, this will be important here for Australian dollar here. And Friday, again, a big thing here. One is trade balance numbers for Canada. Very, very important during this time when everybody is concerned about exports. Trade balance number is an important number to pay attention to. If it's negative, we're likely to see Canadian dollar drop, which means dollar CAD would go up. And then we have non-farm payroll information here, data that comes out. Again, this is a market moving number, so we have to keep an eye on it. If it's below expectations, we're likely to see US dollar drop. So another thing that's going on right now is that this one here, actually, we have seen President Trump, or we have heard rumors that President Trump has been calling meetings to see how they can weaken the US dollar. So if they do take some action, so normally they do not want to intervene in the market. However, anything can happen. So keep an eye. The countries have been known to intervene in the market and actually cause movements. So if President Trump wants the US dollar to weaken and they decide to take action on it, what they generally do is they will sell US dollars, which causes the US dollar to drop. So this week, I would suggest being very careful when trading the US dollar. All right, so now let's move on to our charts here. So we will, as usual, start off with our euro. So last week, we were looking for euro to drop. We have seen that drop right into our support. And we saw euro move back and forth based on the ECB. So now we have a nice solid candle close, but right into our support. So this setup here looks very similar to this one where we have had a solid candle close right into our support. But look what happened. It didn't actually go through. So I would be careful because this is an important support level here. And we could see price actually go up from here, especially with the US dollar, tons of news coming out this week. So this one could actually bounce off of that. So I'm going to say the bias is to the downside here. However, pay attention to this. And if it does not break through, chances are it could just go up like that. And if the FOMC is negative, it could go up even higher based on the negative FOMC. So we have to be careful with this one. Bias, I would say for now, is to the downside. I would look for a pullback around 1.1180 and then I'm looking for a drop. But like I said, if it does not break below 1.1100, it could very well go up like this. So be careful with that. For now, biases to the downside. First target 1.1020, and second target is 1.0920. But again, strong word of caution here. All right, so that's our euro. Bias is bearish. Pound here. Pound has been interesting as well. We saw all kinds of Brexit-related news, which pushed the pound around in all directions. But we do have a bearish close right into our support again. So just be careful, like this one here, closed right into the support, but price went up after that. So stuff like that can happen. Even if it's a strong candle, we could see a turnaround. So here, bias is bearish. First target is 1.2300. And then below that, I would look for 1.2120. So bias here is bearish. Now we could get a bit of a pullback here. And for pullback, I would look at 1.2450 and then a drop. So bearish bias here for euro, for pound, dollar as well. Again, FOMC, things can go in any which direction, so just be careful. Okay, our Aussie dollar here, it ran into resistance and we had a big drop here. So bias here is bearish. We have a strong bearish engulfing candle here. So looking for price to drop. We could get a pullback into 0.6950, and then I will look for price to go into the support level here at 0.6835. So bias is bearish. First is 0.6835, then 0.6750. Pullback on pound, 1.2450. Oh, another thing, if you don't want to write all these numbers down, you can just subscribe to my mailing list. At the end, I will tell you where to go to download the forecast spreadsheet. So every week I send out a spreadsheet that will give you these numbers in the spreadsheet for at a glance. So it just makes things easier for you. But the bias here is bearish. New Zealand dollar, again, another one, big drop here. Price was into resistance like we had talked about last week right here, and we got a big drop. So bias here is bearish, and our target here, we could probably move this lower, target is to the downside. We have a nice solid bearish engulfing candle. So for a pullback, I would look at this level here, 0.6680 for potential pullback. First target is 0.6565, and then second target, we're looking at this support level at 0.6480. So bias here is bearish for New Zealand dollar as well. Dollar CAD here, this one has gone up. Now we have seen price go above this little range it was trading in for weeks here. For 4 weeks, price was stuck in this range, and now it's actually broken above the range. So that makes the bias bullish here. But for all dollar crosses, FOMC and non-farm payroll number will make a huge difference. But we also have Canadian data coming out this week. We have GDP numbers as well as trade balance numbers. Both of those numbers are very important. So this pair will be impacted by both US dollar data as well as Canadian dollar data. So just be careful here. So bias for now is bullish based on technicals here. And first target here is, so this is what I would look for. Either we could get a pullback into this level here, top of these pins, or into this second pin here. So I'm saying, let's say 1.3100 as a potential pullback. First target is 1.3230 and then 1.3280. That's the move I am looking for. So bias here is bullish for dollar CAD here. But before I move on, just one more time, FOMC can change these things completely. So just keep that in mind. All right, so euro pound here. Euro pound, last time we were looking for a drop. It dropped nicely, but now it has moved back up with all the Brexit concerns that we have been seeing. So we do have a bullish candle close here. And as a result, we could see price go up, move up higher. So here we have first target here will be, so I would look for a pullback, potential pullback into 0.8950 level, and then a further move to the upside here. So bias is bullish for euro pound. Oh, actually, so just to, perhaps I should change the way I do these things, but there's no significance in terms of the color of my lines. The lines that you see on the chart are support resistance lines. These are the places that I'm looking for price to react, but there is no significance in the color of the lines. They're the same. Okay, so Euro Swiss franc here. Last time we were looking for it to drop. It dropped into our support here and has moved up since then. So bias here is bullish now. So looking for price to go up higher. So in terms of a pullback, I would look for a potential pullback into 1.1010 level, and then a further move to the upside. So something like this, right? Now, keep in mind that right here, we also have support turning into resistance. So if price does not go through this level, it could drop from here as well. It could try to go through. If it doesn't, it could drop. So be careful with that one. But just based on the candle close here, bias is bullish. Like I said, if it doesn't go through 1.1050, it can drop. But for now, bullish bias, and the target is 1.1150 right into here, which is our next level of support resistance. So bullish bias for Euro Swiss franc. Pound Swiss franc here, this one has not really done a whole lot. It just got stuck in this range. So we have a neutral candle here. This is a spinning top. So we have small candle body and pins on both sides, giving it a neutral bias. This one can go in either direction. So far, it looks like price has been holding below 1.2340. If it continues to do that, we are likely to see price actually move lower. So like that, if it stays below that level, this support resistance here at 1.2340, let's say 50, then price is likely to drop further. So bias here is neutral, but if it breaks through this level, then I would look for it to go into 1.2450 or even 1.2500. So again, it really depends on what happens at 1.2350 level. If it stays below, I'm looking for a continuation to the downside. The question is, why don't I do analysis on a daily chart? I do analysis on a daily chart as well, and that is the daily market analysis calls that I do. And actually, you can find I usually do the dollar crosses. That information is available on my YouTube channel. It's not a call like this. Well, it's like that for anybody who is a Trade Vault member. But for people who are not Trade Vault members, if you want the free, I do the dollar crosses as well as the commodities and the indices. All of that is free on the YouTube channel, and you will see it. You will see it uploaded daily. Okay, so this one here, this one is interesting here. This is dollar Swiss franc. So price has been trading in this range for some time. So we have a solid green candle close. Prices has made a higher low, but it has been stuck in the range for the last 4 weeks. So we have to take this one with a grain of salt. And what I'm saying is, because it has been range bound, If it doesn't break through this level at 0.9950, it can go back into the range. So we have to be careful. But because we have a bullish candle close, I would say the bias is bullish, but again, with caution here. Next target is 1.00, and if it goes through that, we're looking at a 1.00, actually, let's say 1.10. All right, so bias is bullish here. Like I said, if it doesn't break through here, then I will look for price to come back towards the bottom of the range at 0.9800, because it's trading in this range here for the last 4 weeks. Price has been stuck in this range. However, once we see a break here, I will look for price to go higher into the top of this pin here, 1.00, and then potentially continue higher into the next level here. So bias here is bullish. Pound yen, this one has also dropped. We saw a pullback all the way into the previous support resistance level. It hasn't quite broken the support. Now this week and this is related to all the yen crosses, we have Bank of Japan coming up right in the beginning of the week. If they are dovish and if they say they're going to take monetary policy action, that could cause Japanese yen to drop, which means all the yen crosses could go up, sorry. So keep that in mind. Now, but other than that, with the current, the way the current candlesticks are, bias is to the downside. And again, we have to see, as long as price stays below 135.50, bias is to the downside, and I will look for price to drop into the next level, 131.50. So bearish bias here for pound yen. Euro yen, this one was interesting. We saw this big move up when due to ECB, and now we haven't quite filled, or the price hasn't really filled the inefficient move here. So it's still holding up there. So from a weekly perspective, we have an indecision candle here. So with this one, it makes things a little bit interesting. So we have a Bank of Japan policy coming up, as well as with the ECB. So this is what I would look for. So bias right now is neutral. The candle close is neutral here. And I would look for a move into 121.30 level. If it holds below, I would look for it to drop. And first target would be 120. Second target, we're looking at 118.80. So for now, bias is neutral. And as long as it stays below 121.30, I would look for a continuation move. However, should it break through this support that turned into resistance, then we could see price go all the way into 123.20. So this one, again, we have to be careful with. Bias is neutral for Euro yen. And yes, the recording will be available on YouTube as well. And if you join my list, you will get it in your email as well. So no worries there. Dollar yen. This one is, we have a bullish candle close, but for several weeks now, this one has been trading in a range. So we are right into the top of the range here. So for now, I'm going to treat this as a range-bound move. If price stays below 109, I would look for price to come back down towards the bottom of the range here and stay within the range. So my bias on this right now is neutral. But as soon as price breaks through this 109 level, I'm looking for price to go into 109.50 and then continue on further. So it really depends on if it can hold below 109, because if it doesn't, I'm looking for it to go into 110.20. So for now, bias is neutral, but once this resistance gets broken, I will turn bullish on this. Aussie yen here, this one has dropped as well, because we saw Australian dollar drop. So this one was also trading in a range. So this is actually a good example, just like euro dollar yen, has been doing. This one was staying in a range, and now we have a drop because it couldn't go through the high. Sorry, excuse me. A bit of a cough there. Okay, so bias is bearish here. I'm looking for price to drop towards the bottom of the range here, potential pullback into a 75.50 level, and then looking for a drop here. And in terms of our targets here, looking at 74 and then potentially into 72.50. So this is what we're looking at. This is bearish bias here for our Aussie yen. Sorry, excuse me for 1 second. Okay, sorry about that. I need to do something about my cough. Okay, so this one here as well, New Zealand yen bias is bearish. We have a nice bearish engulfing candle close here. So now looking for price to drop further. First target here would be 71.50 and then 70.20. So the move that I would look for will be a potential pullback into 72.50 and then 71.50 and then continuation down into the bottom here at 70.20. And as we wrap up the yen crosses here, again, we have Bank of Japan first thing on Monday here or Tuesday. So just watch out because things can change with monetary policy. Okay, CAD yen here, we have seen that it hasn't been able to break below the support. Canadian dollar has been strong. So with this one here, it's still sort of trading in this range here. And so bias is neutral. It's range bound at the moment. So if it doesn't break, I will look for it to test the low. If it doesn't break, it could go towards the top of the range. So watch out for that. My bias here is neutral. And as long as it holds above 81.15 level here, the base, then I will look for it to go towards the top at 83.20 level. So neutral here. All right, so now let's move into our commodities. We'll start with the gold here. Gold is still range bound here, hasn't really moved out of this range. It's been stuck in this range for several weeks. As we can see, we have a bit of a bearish candle close here. So I would look for a price to basically still be range bound. Now, as US dollar FOMC comes out, it will impact gold as well. If the FOMC, if they cut rates, let's say they cut rates 0.5%, it will be negative for the US dollar. But we could see the equity markets go up, right? And when equity markets go up, we could see the gold actually react as well because the risk goes into the market and gold could drop. But then we also have the US dollar there. So I would just be cautious here. Basically, bias is neutral right now. Neutral to slightly bearish because I'm looking for price to basically go towards the bottom of the range here and stay range bound for now, unless we get any kind of an upset. So within range, looking for it to continue towards 1385 level here. So slightly bearish within the range. Silver here, silver has also been range bound. We saw actually going to the daily here, as we can see, price has been stuck in this level for a while. It's holding above this previous support resistance and it's stuck in this range here. So looking at the weekly, this is what we see. Price has rejected that level. So in this case, we could see a retest of that. And if it stays below, looking for it to drop, but it's stuck in this range at the moment. So for now, I'm looking at silver to be range bound as well, just like our gold. All right, oil here. Oil hasn't done a whole lot either. We have a neutral candle close. Price opened and closed at exactly the same point. We have pins on both sides. So for this one here, right now, it seems it's neutral. So what I would look for is how price reacts. So if it goes into the high here of this candle at 57.65, if it stays below, then I'm looking for it to drop. And then if it breaks through the bottom, then I would look for it to continue to the downside. However, if price comes into the bottom, does not break the support here, then it can go up higher. And if it breaks through the high, then it can continue on higher as well. So at this point, this is completely neutral, and we just have to see which way price wants to break. So our next level will be 61 to the top side, and if it breaks to the bottom, then we are looking at 50.80. We have to wait here. Okay, copper here. Copper is looking bearish. This one has also been range bound for quite some time now. And now we see that price is wanting to come back down towards the bottom of the range. We could get a bit of a pullback into 2.68 and then looking for it to drop. So that's what we are looking for. It's still range bound. So within the range, I'm looking for it to drop. Bitcoin here, this is not an updated chart because my broker is closed on the weekend. So you may want to check the updated chart, but this will get updated today. So for now, price has been trading in this range here. And within that, we have a smaller range that it's been trading. This is the daily chart for several days here. The entire week, it's been stuck in this. And now we have this downward move here. So just based on this older chart since Friday, we are getting this push to the bottom. This is a triangle pattern. So we could, if we see a break here, we could see a drop. But if it doesn't break through here, then it can go back up. So for now, it is slightly to the downside. And if it breaks here, next target is 84.60. So if it breaks below 94.50 and holds, then it can go into 84.60 level. S&P 500, this is very interesting. We saw markets have gone back and forth. They have held these highs here. Price has been trading above the support resistance level here. So price broke through this level and now it's holding higher above this level. So this shows us that markets are optimistic that Fed is going to take action, and that gives them the bullish bias here. So bias is bullish, price is holding above. If the Fed disappoints, we can see the markets drop. So that's something to keep in mind, whether you're trading the US dollar or the equities. Keep in mind that if the Fed disappoints, if market does not see what they're looking for, and if President Trump is holding meetings to figure out how to intervene in the currency markets, that means he's not satisfied with what Fed is doing, which means markets could be disappointed. Now, that's purely my opinion, and it's just based on actions as opposed to what, anything that's really fundamentally going on. This is just based on actions, because otherwise President Trump wouldn't need to really hold meetings to either see Powell getting replaced or to hold meetings about weakening the US dollar. That means he's concerned that US dollar will continue to go up. Take that with a grain of salt, as purely my opinion, but markets are poised to move higher at this point. So if the Fed comes in, if they cut rates and they're dovish about the economy, then we are likely to see US dollar drop and the equity markets go up, because then they would be expecting Fed to do more in order to prop up the economy. So this is what we have right now. This is looking bullish. I will look for price to move up higher here. Let me just remove the lines. Okay, so I will look for markets to move up higher. So if we see a break above the high, the close is very, very strong going into the end of the week. They could go higher into 30.80. So bias is bullish for S&P 500 at this point. Same thing with our NASDAQ here. Very, very strong bullish candle close. Price has held this resistance and turned it into support. So very, very strong close here. And next target is 81, and I think it could go even further into 82, depending on how strong, what kind of statement we see out of Fed. So right now, markets are poised very much to the upside. But anytime we see this type of a price move or aggressiveness, just be careful. Because the disappointment is actually has a bigger reaction than the positive news. But if we get the positive news from FOMC, the chances are very high the market could continue on. So this would be a good lesson to learn, to just observing the markets. Okay, so bias is bullish. 82 is the 81, and then 82 will be the two targets I would watch out for. And then DAX here. DAX, on the other hand, not as strong. This one is range bound still. It's been trading in this range for the last several weeks here. So bias is bullish. I will look for price to go towards the top of the range here into 12,650 level. So bullish bias here for DAX. And then FTSE here, FTSE is looking bullish as well. It's also holding above this previous support resistance level. However, FTSE is not at all-time highs like we saw with S&P 500 and NASDAQ. So there is room to the upside here. So bias is bullish here. But first, we need to see a break above these previous highs. And then I will look for a further move higher into 77.20 level. But with FTSE, keep in mind, we have Bank of England monetary policy statement, which will have a direct impact on FTSE as well. So important to pay attention to that if you are trading the FTSE. But right now, this is looking strong. 75. So the first target here would be 76.20 and then 77.20. So bullish bias for FTSE as well. And last but not least, we have Nikkei here. Nikkei, on the other hand, it's been trading in the range, but it hasn't quite broken above the range. So I would just be cautious with this one. Again, we have Bank of Japan this week as well. And if they talk about easing the monetary policy, I would look for this one to break out as well to the upside. 22,250 is the first target. And then we're looking at 22,500 as the second target. But first, we have to see a break because this has been trading in the range for last several weeks as well. We have a bullish candle close, but we need to see a break above and then a continuation. If we do not get the break above, then it can just go back into the range here. So that's what we have for FTSE here. So I would say bullish, but with caution. Any questions here so far? All right, so before we wrap it up, just to let you know, if you guys would like to see a daily analysis from me, I do the daily analysis on 20-some pairs every single day. And if you want to join me, you can join the Trade Vault service. So you'll get the market analysis every single day, Monday to Thursday. And you will get the spreadsheet with it as well, in which I will show you market direction as well as what we were talking about, the pullback levels, as well as the potential target levels. And you will have access to me, and you'll be part of the Facebook group, so you can ask me questions. And if you'd like to join that, you can go to bit.ly and Trade Vault. Now, if you just want to get the spreadsheet for today's analysis, you can go to, let me just bring that up. You can go to tradingwithvenus.com and forecast/forecast. You will see this page. If you register once, you will get the download. You'll be able to download the watch list for the pairs that we covered today. And if you sign up once, you will get them every week. All right, so that's all I have. You guys have a wonderful rest of the weekend and a great trading week. I do my daily analysis for the five, six crosses every day. I post it on the YouTube. That one is free as well. If you would like to check out my YouTube channel, you will find the recording of this as well as every day the daily market recording for 5 pairs on the YouTube channel. So please check it out. All right, have a wonderful rest of the week, and I'll see you next week. Bye for now.